Hello and welcome to the ASB Investment Podcast, the show that keeps you up to date on the markets and helps you make smart choices with your investments. These are entirely our own views and that of our guests. It's not investment advice, but we know plenty of experts at ASB that will be happy to chat if you need. Well, hi everyone, and welcome to another episode of the ASB Investment Podcast. We've got a slightly different subject for this episode, but I assure you it's incredibly interesting. Hopefully you can tell in my voice we've been having a bit of fun as we've been getting ready for this podcast, and it's flowed through to my energy and excitement for this one. This one feels like it's bringing back all sorts of nostalgia, thinking about this topic, because it's centered on both research and the university setting, where I spent some really great years of my life, and also the topic itself that we're going to chat about. And so for today's show, today's guest is Dr. Gertjan Verdickt, a lecturer in finance at the University of Auckland, whose work explores the intersection of finance and history. He earned his PhD in financial economics. There's a lot to read through here, so this man has the credentials. A PhD in financial economics from the University of Antwerp, and has held research positions at Stanford, Notre Dame, and Columbia Business School, which is in the States. Very impressive. In addition to that, has published in top journals, serves as an assistant editor at the Financial History Review, and his insights have been featured in outlets that I watch: Bloomberg, Forbes, and the FT, which is the Financial Times. He's also the co-author of the book Investorin' in Style, or, said in English, The Passion Portfolio. We're excited to dive into his research, which is passion investing and the fascinating stories where finance meets history. Dr. Verdickt, welcome to the show.
Well, thank you for having me. Thank you for the nice introduction.
Oh, I'm so excited. So for our listeners, can you just give us a brief intro, in addition to what we've already talked about, on what you do, and I guess, and then we'll get into kind of the topic after that.
So basically, I did my PhD at the University of Antwerp, which was about why do stock prices move over time. So I have this huge data set that goes back to basically the start of Belgium to today to really understand, trends. So how does that work? Do some stocks, are they overvalued, undervalued, and so on and so forth.
Yeah.
So I've always been interested in this topic of predictability. And so basically during the pandemic, I was in the supermarket in Australia at the time, and I was looking at a bottle of wine. I was like, oh, well, I'm looking at the price and the label, and that's where my decision basically stops. Yep. I knew nothing. And then I started thinking, this wine is also an investment asset which somewhat behaves like traditional assets. Like, can we do something to understand, like, why some Penfolds, for instance, why is that $1,000 versus like Jacob's Creek, like why is it only $10, $15? So try to really understand that. I started exploring this both from like a passionate perspective from the consumption good, but also from a more an academic perspective as the investment good.
And so just so listeners know, you're from Belgium.
I am.
And been in New Zealand for 1 year?
For 1 year now, yes.
Okay. And just to recap, you've come from one side of the world to the other. What was the main things that attracted you to come here?
So I love Lord of the Rings. So that was one of the first real movies I've seen. I was like, this is just amazing. I love nature. I love the outdoorsy. So New Zealand attracted me. Also, like, everybody speaks English, which makes life easier. I can speak some Spanish, but not enough to actually teach.
Just casually dropping that you also speak Spanish. Yeah,
just
enough.
Slightly. Yeah. So enough to survive. So that's like, which parts of the world are open to that? And I had a seminar here 6 years ago, and the group itself made a very nice impression. I saw a vacancy. I was like, my parents are still young. I'm still young. Let's do it now. And I went for it.
Well, we are better for having you for as long as we've got you here. So now, for context for listeners, I spotted Gertjan's photo in the magazine sent to my wife, which was, from the University of Auckland's alumni, group in the magazine they sent out to keep, former students. And I always give it a read over to see if there's anything interesting, any new research being talked about. I sound like, I'm so learned, but and on this occasion, a particular article stood out. So the wonderful team here behind the scenes, shout out to Brian, reached out to see if we could find you, and here you are. You've been very forthcoming with spending time with us. But let's start with, your story in terms of the recent book you've published. What inspired you to write The Passion Portfolio?
So as I said, I started doing research on wine, and what I basically noticed is that there's not a lot of information. So there's a lot of auctions, but they all have their separate silos in terms of like results. So what I started to do is just collect data, because as you said before, I love history. History is also about just collecting data. And I just started, I managed about 20 students and PhD students to actually gather this huge data set. And now I have the largest data set in the world.
On wine?
On wine, exactly. So I have like 6 million observations all across the world, New Zealand, South Africa, Australia, you name it, I have it. And then I started thinking, okay, so what can you do with that? Started exploring a little bit the practical implications. Okay, are there wine investment funds? There are, but they weren't very successful. Try to start to understand, okay, why they're not successful. And then I started dabbling in that a little bit. But every time people ask me like, hey, what do you do? And I say, okay, I study wine prices. They always come like, okay, but like, can you help me? I have this bottle. Can you give me some more information? And I don't really like to give advice. So I always say like, hey, for stocks, you have all of these books. I love them.
Yeah.
And then I saw for wine, well, there isn't really any. And then I started, okay, but you have wine, you have whiskey, you have other investment goods, and there aren't really like go-to layman terms books.
Yeah.
Then my co-author now started thinking like, hey, this is a gap in the literature where we know a lot of. Like, let's fill it. Let's try to make something practical that people can use as more of a reference, a starting book. If you want to know more, here are the magazines that give more information. But like this, we believe this is a good starting book if you want to dabble into this.
But also, I imagine it's a core thing for you was it's backed by empirical, actual data as opposed to like an opinion.
Exactly. That was the most important thing. So one of the things we looked at is it a growing market or is it an important market, but also is there data to back it up?
Yeah.
Because we will talk about it more, but Pokemon cards, for instance, is something which people are very passionate about, but we really can't find quality data.
Okay.
So I don't just want to give like an opinion. No. Everything we write in the book, I have the data sets on my computer. I can do my own analysis. That to me was the most important thing.
Yeah, let the data talk.
Exactly.
So I imagine some listeners will be jealous hearing about the combination of wine and it being your job. Was wine the perfect gateway into this as a research focus?
For me, it was, because wine is very liquid.
Hey, very good.
Yeah, pun intended. But also the things I'm currently looking at is that an identical bottle of wine is being traded across the world. Like you can go to any store here and you can buy a French wine.
Sure.
Well, it's the same wine in France.
Yeah.
So that's a very nice setting for an academic to actually explore, like, how do different cultures, how do different people, different countries actually look at the pricing of these assets? Because the price is not the same across the world.
No.
So why are there differences?
Even outside of currency fluctuations, it's just...
Exactly.
Oh, sure. And so for our listeners who may be unfamiliar, passion investing sounds like kind of, an oxymoron or a weird concept. I have a few passion hobby items. Gardening, everyone will know about. I'm an avid gardener. Lego, I've said that I love. And watches also come to mind. Not that I've got a major collection or anything. I just, really enjoy the idea of watches, old school watches. But I'm not sure I'd consider that I'm doing it primarily for investing purposes. So what defines passion investing?
So we define it as it's a real tangible asset. Because normally if you talk about investing, you think about stocks and bonds, but it's not very physical. Yeah. It's just a concept. Yeah. I own a part of Tesla. But what does that actually mean? Versus what you're saying, I have this watch. I can feel it. I can touch it. I can move it. So that's why we call it passion investing, because it's real, it's tangible, and you need to have a lot of information on this. So not everybody knows about wine, whiskey, or watches. So you need to be passionate about this to know more, to understand, okay, what are specific trends. You, for instance, you love Lego. Like you're really passionate about specific sets, not so much about others. Yeah. So that is how we defined what passion investing actually is.
So as you've described it, it sounds a lot more fun than staring at a spreadsheet, even though I love a good spreadsheet. I'm sure, I think from the sounds of it, you do too. But you talked about kind of it's, I can taste or I can touch, move it. But how, I guess, is it different from other traditional quote unquote investments like real estate?
So all of the things we cover in the book are significantly more liquid, even though it's still considered an illiquid asset class. You only have one house. Yeah. There's not a single house that is exactly the same or maybe closely similar, but so that's why watches, Lego, there's so many of the same wine, there's so many the same bottles, where that's not really the case with real estate. So real estate, we thought about adding to the book, but it is a bit different. Also, you need way more money to just buy one house relative to just one bottle or one watch. So that's why we thought we make it a little more accessible. Yeah. So our book is not for ultra high net worth individuals. No. It's really for like, okay, what can I do? A Lego set, for instance, costs $20. Yeah. So it's still some money, but it's not like, we're not talking about millions.
Inaccessible, yeah. And, you mentioned illiquidity. Can you explain, I guess we've talked about it a little bit before, but, can you explain what that is in case anyone's listening to us for the first time and how it impacts investment decisions in your guys, and you and your co-author or your opinion?
So illiquidity basically means you buy something, how fast can you get it off your hands? So let's say you need money today, you want to sell it today, how fast is it actually going to transpire? For stocks, can be seconds. Yeah. For the average art piece, can be years. For wine, can be months. Yeah. So that is like the time, how long it actually takes when you want to sell, when it actually is sold. That is what we call illiquidity. If that's longer, you're more illiquid.
And has the research sort of said, is there, because sometimes we hear the less liquid, the more valuable it can be. Is there any correlation, or like the less liquid things are, the more valuable they are?
Yes. So there is something which in academia terms we call a premium. So you get compensation for holding something that is illiquid. The only other issue with that is like it also ties a bit with economic cycles. So if you're in a boom market, well, liquidity is your friend. If you're in a bull market, like, that's your worst enemy because then you have to sell. If there's nobody to sell it to and you want to get a quick buck, this is not the podcast
you're a price taker.
Exactly. Yeah. So this is not the asset classes you want to be in. So this is not a get quick rich type of asset. So you have to be patient. You have to be
patient. Yeah. So in terms of, I guess there's we've talked about liquidity, but valuation, I can imagine, is really tough. You talk about there's a gap or like an information gap. Everyone knows what's happening with let's use your example before. Everyone knows what's happening every day with Tesla.
Yes.
When you start talking about a classic Ferrari or a Picasso or a $20 Lego set, how do you value like something like that when maybe it only changes hands once every year, decade, multiple decades?
That's a very hard question, and that is literally the $1 million question. So the assets that we are looking at, the objects we're looking at, they don't produce what we call cash flows. So Tesla, for instance, they pay a dividend. Well, wine doesn't do that. Yeah. However, what we have found in literature is that just having this tangible asset, something you can look at, maybe brag about to friends, that gives you on average 2% per year. So the value on average of your good increases with 2% just by having the fact that you have it, that it's there. We call that an emotional dividend.
Wow.
Now, the other thing is there are a lot of these assets which are a lot of very trend-driven. Yep. So let's take a watch, for instance. Well, if the next James Bond movie comes out and James Bond is wearing that watch, prices are going to go up.
Yes.
So that is something you see as well. And we tie that back to, can you tell a nice story about this? So a watch that's being worn by James Bond, amazing story.
Yeah.
Think about art. If you have an art piece that is really defining a specific genre, nice story. Think about Birkin handbags.
Yes.
Also the story there, a famous actress draws the design of a handbag on, I think it was a private jet or at least business class, gives it to Hermes or the designer of Hermes. Yeah. It's being made, story.
Yeah.
One of the things I'm looking at is wine. Wine that's being produced in 1945, story.
Yeah.
End of World War II.
What?
So it's all about storytelling. It's about scarcity as well. So the fewer there are, the more people actually want it.
Yeah.
And those are things you can track. So Ferrari, for instance, there are places where you can actually see how many are there. Wine, there are places that show information on how many bottles are actually being drunk.
Yes.
Lego, for instance, there are a lot of physical Lego stores that actually advertise, hey, these sets are discontinued. So you know, hey, this supply is going to end.
Scarcity.
It's limited.
Yeah.
Yeah. And that increases value.
Because I think I saw a story a while ago. Is it maybe Dom Perignon, or one of the most famous, if it's not that one, champagne. The company came out and said the grapes are not at a standard this year that allows us to meet our quality assurance or levels. Therefore, we will not produce a single bottle this year. And the company that's a bold move, but I'm assuming that then goes story, scarcity, also pretty bold to make that claim. But so you're saying the emotional dividend of being able to brag about it, scarcity and a story are critical drivers.
Exactly. And in that specific case, if you really love, let's say, Dom Perignon, you're going to buy the previous vintage. So if you hold the previous vintage and you know that future supply will be lower, prices will go up.
Yeah.
So that's then something, you want to buy my bottle? You want to drink it?
You can't.
Add $50 to it and we can talk.
And so you talk about the Hermes bag and things like that. What about authentication? Is that like a fourth driver of that, or is it kind of like almost that you need to, that is table stakes for these things?
No, so that is the thing we have seen over the last couple of years. And Netflix has a very nice documentary which is called Sour Grapes. That is basically an Indonesian guy who recreates old vintages with very cheap wine. He's very good at tasting and he can recreate bottles and sell those at like huge valuation.
Yeah.
Those fraud cases are really big. So if you're an auction house, so an auction house is then a place where you can sell these things, this is not what you want to advertise whatsoever. So they demand something which we'll call provenance. Yep. Provenance basically is, hey, give me the entire ownership structure of your bottle or of your watch or whatever. Give it the storage conditions, just the conditions where the object is currently in.
Yeah.
And then we can talk.
And verify those points with evidence.
Exactly.
Yeah.
So other research has shown, for instance, that just by the fact that you spend time collecting that information, that increases the value. And interestingly, fraud still happens. Well, it is what it is. Also with art, there are a lot of copies.
Yeah.
If you're forthcoming about the fact that, hey, this is a copy, that doesn't decrease the price or doesn't let the price go to zero. If it's a copy, prices drop. But if you're actually honest about it and if you say, okay, this is like where everything actually comes from, prices go up. Even there are instances where there's Chinese art, the copy is more valuable than the original.
The copy's more...
Exactly. Because it's being done by a very famous person. Yeah. So these are dynamics you also see. So that is something people have to look out for. This provenance is something which is very important. So one other thing, especially since the pandemic, is a lot of these platforms, most often online platforms, ask for a lot of verification. So if you're a seller, you need to be verified. So if you did something wrong, you're kicked out of the platform.
Oh, so the seller verified in addition to the thing they're selling.
Exactly.
Okay.
Yeah.
Okay.
So that is good. That's very important because as compared to traditional assets, there is no regulator here. So
sure,
in that sense, all of these platforms, these auction houses, their reputation is important.
Yeah.
So that is an informal regulator in a sense.
It's almost a self-policing mechanism. We've talked about authentication, liquidity or illiquidity, turning our minds to one of the most important factors in any investment, returns. Mm-hmm. So you discovered that, now preparing for this, you discovered that whiskey of all things provided it makes it, or it stays in the bottle, had the highest historical returns. What's driven that?
Well, one of the things is there are not a lot of whiskey producing countries in the world. There are only a few who really do it, and it really does it top notch. Yeah. So in that sense, coming back to your earlier point, this illiquidity is very, very important because it's a very small market and it's a good that everybody in the world drinks, basically.
Yeah.
So in that sense, supply and demand is a little bit skewed in there's less supply and more demand. And that is what's driving this entire thing. But whiskey is also something very interesting because there's a lot of Japanese distilleries who just went out of business. And what do you see? Well, those bottles still exist. Those bottles actually are skyrocketing in terms of price.
Oh, they've gone out of business recently?
A couple of years ago. Like I said, 10 years ago or so.
Do you know, you may or may not, why?
Not very popular at the time. So they've been having cash flow difficulties.
Oh, the product and the product wasn't popular.
Yeah.
And so that's carried on to the business.
Exactly.
And so then the business is closed.
Yeah. And now everybody wants those bottles. And if the prices of those bottles were being bought at the time, they were still in business.
So it's kind of almost like this, the seeds of the success were sown during the demise of...
Yeah. But that comes back to the point I made earlier. There's a shock to supply because, nobody makes that anymore.
Yeah.
So then prices go up.
I think because Chris Tennant Brown, who we have on, his wife is Japanese. And I can't remember when we were talking, sometimes in Japan, I think he was saying there's a challenge with passing on the business to the next generation in certain things. And if the generation doesn't want to take it on, the business can follow. I just wondered if that was kind of, distilleries, if no one's there to take it on, they might close and then they're not making any more.
Could be.
And so we mentioned baseball cards and Lego. What makes are those markets strong? And if so, what makes them strong?
So baseball cards is a very US thing.
Yeah.
So we mentioned Pokemon cards, for instance, is also very important. Magic the Gathering, for instance. So I live in Takapuna. There is a store literally 10 meters from me who sells that. So there is a market for it. But these baseball cards is a huge thing, especially in the US. So we're talking about hundreds of thousands of dollars in the plastic.
Yeah, or in like a case, hard case to protect
it.
And so is Lego actually a worthwhile, or it's an actual investment class?
Yes. So Lego also has, on average, a very nice return.
Okay, I'm writing these notes down. Okay.
What is also very important for Lego is you can use it. So the example I love to give, as I love Lord of the Rings, is you have these orcs.
Yes.
These orcs were being sold a couple of years ago for 15 New Zealand dollars.
Yeah.
If you were to play with them and have used them, right now the price is $25.
Okay, so if you unboxed.
Exactly.
Yeah.
If it's still in the box, it's $35.
Right.
So the return is substantially higher.
Yeah.
But if you have used it, it's not zero.
Correct.
It's still positive.
It's retained it. You're right. Okay. Yeah. As opposed to a car. Well, an average car.
Exactly. Yeah. But the nice thing about this entire story is if you calculate the return, amazing. If you calculate the dollar value you made, well, $10.
Yeah.
It's not very scalable.
Yes.
So you didn't make a lot of money, but on paper you made a very nice chunk. So that is one important thing here, especially with Lego, is the amounts that we're talking about are the smallest of all the asset classes we're looking at.
Yeah, but they still move like an asset class.
Exactly.
Because my wife searched high and low one year for my birthday to find me the Lego bank. This is an insight into my life.
Okay.
Yeah, it's pride of place on the mantelpiece. The Lego bank, actually, I'm just disclosing everything. The Lego bank is beautiful, but it is they've built it next to a laundromat in the set. And people launder money through the laundromat. I think it's sacrilege, but it was so hard to find. She managed to find it, but I imagine so it's built, but if we'd kept it in that box, it might be worth more than it is now. What is there a category of sort of passion investing that shocked you?
So Lego, for instance, that was substantially more than what I would have thought. So the one thing that also somewhat surprised me. So in the book, we call it drinkables, which is wine and whiskey, and we have wearables, which is watches, jewelry, and handbags. What surprises me with that category is that the line between consumption and investing is very small. So you can wear your watch and still sell it. Similar with Lego, you can play with it and still sell it. I, as an economist, always thought, well, if you have worn it, if you have played with it, like price would be zero.
Yeah, but it's certainly not. I mean, watches, it's almost like they're made to be. They still will retain and accelerate.
Exactly.
Whereas if the whiskey bottle's open,
it's gone.
It's gone. And so as we're wrapping up, let's talk accessibility. Something like Lego is easier to enter than, say, vintage art. Does that affect its appeal?
It does, because we mentioned Ferrari before.
Yeah.
You need a lot of money. And especially if we, again, talk about emotional dividend, bragging rights.
Yeah.
It was a very nice story about the Lego bank.
Yeah.
If you were to tell me you have an entire garage with 5 Ferraris, people are just more impressed.
Yeah. Are you not impressed by the Lego bank as much? Okay.
I definitely am.
Okay, thank you. All right. I'll work on my story.
No, but just like the amount of money you need for those Ferraris is just crazy. So it's only a select few who can.
Yeah, and isn't there like with Ferrari, it's not like you can go down to the Ferrari dealership and go, here's my money, I'm going to get it. I think, isn't there some sort of like you have to wait list?
Yes.
And that must add to the...
Exactly.
Yeah.
So that is also a very, very nice story. A lot of these watches, which you can basically see in Queen Street,
yes,
most of the time you can't buy. You have to be on the waiting list.
Correct.
If you look at the price at the retail, literally the next day on the secondary market, or sometimes you get double or even more for exactly the same.
The secondary market is more than the shop.
Exactly.
Yeah. And is that just because of the weight?
Exactly. You can't get on the waiting list.
Sure. As opposed to with the new car anti-premium. I drive it off the lot.
Yep.
Worth less,
Exactly.
10,000 immediately or something.
Exactly.
And so do you think, final question before we get into the wrap-up one, do you think passion investing will go mainstream? Or is it mainstream?
It's becoming mainstream, and I really think so, because what we have seen over the last couple of years, and especially with blockchain technology, is that it becomes more accessible. So art, for instance, not in a million years can buy a Picasso. But what I can buy is 1,000th of a Picasso.
So a share.
Exactly.
Yeah.
So that is something we've seen nowadays, that all of these things are being turned into certificates, fractional investing. So I can buy a fraction of this piece of art.
Yeah.
And that is something in art that's being very successful. I don't understand why people haven't done this for wine, because wine as an investment good is very popular.
Yeah.
But it's very hard because transportation, storage, and so on and so forth.
Yeah.
You would make the illiquid asset significantly more liquid with those fractional ideas. So that is something we will see moving forward.
Okay.
I think that is the next innovation.
I feel like if there was an academic out there who had a giant data set who wanted to be an entrepreneur, there is an opportunity there to step into. You never know, right? Maybe in years to come, you might be coming back as the person who made wine more liquid. Well, I mean, I hope it comes through in my voice. I say a lot of our conversations are fascinating, but this has been wonderful. It's so interesting to dive into the world of passion investing. There's hope for my retirement yet I just need a few more Lego sets and maybe just stop playing with them. To our final question now, Gertjan, what's something you've been reading, listening to, or watching that you could recommend to our listeners?
As everybody has noticed, I love wine, so I'm very much into the wine world. So
yes.
I always listen to the UK Wine Show, which is also a podcast.
Okay.
And they also have a very nice finger on the pulse of what is actually happening in that sense. And that is, to tie it back a bit to the book, there is no real outlet that gives information for investors. So you have to go through as a consumer to try to read between the lines what is happening. So I think the UK Wine Show is very nice in that sense, because they try to have investment people on the podcast.
Right. Have you been on there?
No, haven't been asked.
So they've got their next guest. I think I might start listening to that. Well, aside from getting a copy of the Passion Portfolio, is that that what the book was called? What's the book?
Passion Portfolio, exactly.
Passion Portfolio. I'm going to go and get that. I genuinely mean that. I've just completed the BlackRock half-year outlook, so it's a great review of what's happened over the past 6 months. Obviously, we work with BlackRock, as listeners will know, and what it might mean for the next 6 months. For me, the takeaway after our conversation is, where's this in there? Passion investing. I think the key thing is, in the future, tokenization, securitization of intangible things that aren't houses, and I think maybe I'll mention that to BlackRock and see how they're thinking about that. But thank you, Gertjan, for giving up your precious time, stepping away from the wine data, the wine podcast, mountaineering, as we understand as well, to provide you insights into the alternative world of passion investing. For our listeners, it's been a pleasure having you on the show. I hope you've had a good time.
Thank you for having me.
We will be getting you back. I want to see how my Lego's performing. So, but until next time, happy investing, happy hobbying. Look after that Lego, and it's bye for now. Thanks for listening to the ASB Investment Podcast. If you have any thoughts on this episode, or if there's anything you'd like us to discuss on a future show, get in touch with us at podcasts@asb.co.nz.